Hi there, it's Alvin from Dr. Wealth. So the news is out. OCBC Bank is buying Great Eastern for the remaining shares that it does not own at an offer price of $25.60. Okay, so we will later evaluate whether this is a fair price or a fair value paid for the Great Eastern shares. I also think that even if you are not a OCBC shareholder or a Great Eastern shareholder, I think this video have some educational value out of it so that we can understand corporate governance and some of the fiduciary duties of what a board of directors should perform. Okay, so let me talk about there's actually a backstory to this, right? The thing why OCBC is making this offer at this point in time, I think it coincides with what happened about a month or two ago, right, when there was one of the minority shareholder, his name is Ong, and he was ex-remisier, right? So he represented a group of minority shareholders to send a letter to the board of directors in Great Eastern, and these were the resolutions that the minority shareholder wanted to put up for a vote at the upcoming AGM, right, which has actually passed. Okay, but at that point in time when the letter was sent, the AGM has not been conducted yet. So they wanted to insert these three resolutions. And these three resolutions, I think they have some merits, but I just want to zoom in on resolution number 2 because I think that is the most obvious resolution that I think is fair to be discussed and or even to be voted by the rest of the shareholders. So that resolution 2 is about the executive share option scheme, which are paying or distributing OCBC stock option to the key managers of Great Eastern. So typically when it comes to stock options, right, you would usually reward the employees using your own company's shares. But in this case, they're using the mother company shares, which is OCBC, because OCBC is the parent company of Great Eastern. It is weird because by right, why you want to give your own shares is that you want to incentivize the employees to do well for your company. But if you give the shares of another company, what are you trying to incentivize? I don't know what the behavior or the thinking is behind this. And this is the first time I ever came across that a stock options is given shares of another company. Okay, I never seen this before, and I think it's weird. It's just incentives the wrong thing, and I think this is a very fair resolution to be tabled at the AGM for the rest of the shareholders to really be aware of the issue and to vote accordingly. So, however, these three resolutions were not inserted in the AGM for voting purposes. Okay, why? Because this was a reply from the board of directors at Great Eastern. They say that the lawyer has advised them that this does not satisfy the requirement necessary for recognition of resolution. So in other words, that request was dismissed or rejected basically. So that resolutions didn't get voted, and I think Ong went up to meet SIAS, which is the Securities Investment Association of Singapore, right, which represent a lot of the minority interests of minority shareholders' interests over the years. And there was an open letter by the CEO of SIAS, right, David Gerald, and they did cite on the minority shareholders, and they also raised some issues basically, right? So you can see that minority shareholders don't typically go all out just to make life difficult for the board of directors or the management. There must be something that they cannot take it anymore, right? They reach a certain threshold. They say something must be done, okay, and it's worth the effort. Otherwise, why would people want to do that? Okay, because if you are buying the shares of a listed company, right, typically you want to be a passive investor, right? You don't want to get involved in how the company is run. You just want to enjoy the financial rewards when the company do well, right? But for minority shareholders to really stage something like this, that must really have hit the certain limit or hit a certain nerve in order for them to be really trying to push on certain of some of these resolutions. So I do really side on the minority shareholders in this case, and I do think that a lot of the points that they raised were valid. Okay, and one of it, of course, the most disappointing part is that the share price of Great Eastern has not done well, right? And on the contrary, OCBC shares price have been performing much better, right? So since 2006, Great Eastern share price was up 124%, inclusive of dividends, and OCBC is up 376% over the same period, also inclusive of dividends. So if you are OCBC shareholder, you're better off by at least 2 times, right? So if you can look at the stock chart, right, which I placed the OCBC share price and the Great Eastern share price, which is in blue, there is a divergence for the first good part of those years, they were moving in tandem until COVID happened. Great Eastern share price didn't recover, but OCBC share price have hit new highs, right? So it makes the share compensation or the share option looks even worse. Why? Because it made people think that you are taking OCBC shares as a stock option because it's worth more, because OCB is likely to perform better, and that's why you don't want even your own shares, right? You don't want to be paid in Great Eastern shares. Of course, another reason that they gave was that the liquidity for Great Eastern shares are very low because the free float is very small. It's just about 11%, because OCBC own almost 90% of Great Eastern, so there isn't much trading to be done, and therefore they couldn't buy enough shares to reward the management in terms of Great Eastern shares. That is a valid point, but I think that because the liquidity is low, because there's nobody trading it, and because it's perpetually undervalued, OCBC should just delist this Great Eastern once and for all, right? So of course now we are here talking about it because the delisting offer has come onto the table. But I believe that if the minority shareholders have not raised this issue and pushed the resolution, I don't think OCBC would offer this, because the offer value was about $1.4 billion. OCBC have that money all the while, right? Why do they want to make the offer now? The way I see is damage control. Okay? Before this whole thing blow even bigger, it's better to just buy out the minority shareholders and move on, right? But speaking about that offer of $26.50 or something along that line, $20 okay? Is that fair, right? So for insurance company, one of the key ways to value them is to use the embedded value. So the embedded value was about $17 billion, right? And it is reported in the Great Eastern annual report. And if we use that basis, which in this case the OCBC offer slides have also indicated, right? If you can see the P/EV, right, in the table, P/EV stands for price over the embedded value. Based on the offer price of $25.60, it is 0.7 or 70% of the embedded value. Okay, so it is not the full value that the shareholders are receiving. Okay, although $25.60 is a premium to the trading price, etc., right? But we are focusing on what is the true fair value of Great Eastern. It should be the offer price should be about $36, right? Not at $25.60. So there is still a 30% discount to the true value of Great Eastern. So in that case, I think that it is not the sincerest offer from OCBC. On a several count, right? So on the first is that there isn't much shares left for OCBC to acquire, about 11%, right, of Great Eastern shares to be bought over, and OCBC have the money, and even if you pay at the embedded value, it is still a fair value, right? So there is no reason, in my point of view, to further undercut, considering that the minority shareholders are not even happy at this point in time. Why don't you just, out of goodwill, offer that embedded value and make everyone happy and just move on from here, right? So I just feel that it came a bit short, right? So yes, OCBC have made the effort to do a delisting offer, but I think it should be sincere enough to go all the way to the embedded value rather than still trying to get a discount out of it. So but anyway, that's my personal view. I'm not a shareholder of OCBC. I'm not a shareholder of Great Eastern. I have no financial benefits out of this. I just feel from a third party angle and what I think is fair, right, for everybody. Okay? And I think that at the end of the day, reputation is very important. Whether it's for OCBC or Great Eastern, especially when it comes to financial products and services, reputation is the key. That differentiates one company from a lot of other companies. You want to put that into perspective and do the right thing. And just close this issue and move on properly, right? Don't leave a sour taste for some of the minority shareholders, right? And it won't look good on you, right? So don't. I don't think one should bully the minorities. So hopefully now you get a better picture, right? And I think that it is a good case study for all shareholders to understand and learn. And minority shareholders' interest has to be looked after, and I think CRs have done some part of it. But I think most importantly, our own financial literacy should improve, right? Such that if we are ever put in such situation, we can make our voice heard, right, in whatever legal means, and as well as to fight for what is deserving for the minorities. Okay, so thank you for watching. I hope you like this video. Give me a thumbs up, subscribe to the channel, and I'll see you in the next one. Goodbye.